Today, you're going to get an inside scoop on buying property in Los Angeles as a foreigner. You'll see the types of real estate you can buy and the legal ways you can hold property, financing considerations, and the crucial legal and tax implications. But most importantly, you'll see the biggest mistake to avoid as an international buyer. This mistake is a common assumption that could get you into heaps of trouble, and I want to make sure it doesn't happen to you. Hi, I'm Tony. If you're new here, I make videos about Los Angeles real estate and what it's like living here. So if you have any questions along the way, feel free to reach out anytime. With that, let's go. I recently had an international viewer email me who had questions about buying a property in the United States, and it occurred to me that we have other viewers who might have the same question. And we work with international clients frequently, so why not share some insights? The first thing I want to confirm is that non-US citizens can legally buy property anywhere in the United States, not just in LA. There are no citizenship or residency requirements to own real estate here. Whether you're looking for a vacation home, an investment property, or even a future place to retire, the US market is open to you. Now, while the door is wide open, there are some key considerations to be aware of. We're talking about legal aspects, tax implications, and financing, all crucial details we'll cover in a second. But first, in terms of property types, the good news is you have a lot of flexibility. You can buy virtually any type of real estate. Residential homes, commercial properties like office buildings or retail spaces, or even raw land for development or investment. And when it comes to how you hold the property, you've got options there too. You can buy in your own name, or for various legal and tax reasons, many foreign buyers choose to purchase through an LLC, a trust, or corporation. We'll touch on why that's important in just a minute. Financing is another big question. While cash is always king and certainly the simplest route, obtaining a mortgage as a foreign national is absolutely possible, although it can be a bit more challenging than it would be for a US citizen. Let's go further into the financing part and break that down, from paying cash to securing a foreign national loan. The easiest and most straightforward path for international buyers is often cash. Many international buyers choose to pay in full to avoid the complexities and red tape associated with US mortgages. It simplifies the transaction, speeds up the closing process, and can sometimes even give you a stronger negotiating position. However, if paying all cash isn't your preference or simply isn't feasible, don't worry. Foreign national loans are an option. These specialized mortgage products are offered by a select group of banks and private lenders who understand the unique circumstances of international borrowers. Here are some things to know. Typically, you'll be looking at a higher down payment requirement, often ranging from 30 to 50% of the property's purchase price. There are ways to get a loan for 20% down if you have an existing relationship with a bank that has an international footprint like HSBC, or with a portfolio lender, meaning the loan is made from the lending institution's own funds. The interest rates for foreign national loans are generally higher than what a US citizen might receive. This reflects the different risk profile associated with non-resident borrowers. When you apply for a foreign national loan, lenders will require specific documentation to verify your identity and your financial stability. Be prepared to provide your passport and visa along with an international credit report if one's available from your home country, or at least strong banking references to demonstrate your financial history. They'll also ask for clear proof of income and assets to ensure you can comfortably manage your mortgage payments. This might include bank statements, employment verification letters, or documentation of other investments. By the way, if you're finding this helpful, hit subscribe. My mission with this channel is to help you understand the LA market and make smart moves, whether you're relocating, upgrading, or investing. So follow along if you'd like. Now let's shift gears from money to the often complex but absolutely essential legal and tax considerations, vital information you don't want to miss. So far we've talked about acquiring property in the US. Now let's talk about taxes and legal considerations, the things that happen while you own property. And then we'll talk about what happens when you go to sell. These are a really important part of buying property in the US as a foreigner. By the way, I'm not an attorney or an accountant, so don't construe what follows as advice. I'm a licensed real estate broker, and I stay in my lane and let others who are licensed in their respective fields handle the particulars within their specialization. However, I want to be able to give you a big picture understanding. First up, let's talk about taxes and the ITIN, or Individual Taxpayer Identification Number. This 9-digit tax processing number is essential if you plan to earn any income from your US property, such as rental income, or if you intend to sell the property later. It's how the IRS tracks your tax obligations. You apply for it through the IRS, often with the help of a certified acceptance agent. Now, speaking of rental properties, this is a part of the big mistake I teased at the top of this video, and I'll cover that in just a second. Now let's talk about ongoing costs property taxes, which apply to everyone. As a foreign owner, you'll pay the same property taxes as U.S. citizens. These taxes are levied by local governments and are based on the assessed value of your property. They contribute to local services like schools, roads, and emergency services. For example, here in Los Angeles, property taxes are generally calculated as 1% of the property's assessed value, plus additional local voter-approved taxes and assessments. This often results in an effective property tax rate that can be around 1.1 to 1.25% of the purchase price, although specific rates vary by city and district within Los Angeles County. Now let's talk about what happens when you sell your property. For Los Angeles, you'll need to be aware of the LA mansion tax. This is a recently implemented transfer tax that applies a 4% additional tax to properties sold over $5.15 million and 5.5% for those selling over $10.3 million. This adds a substantial percentage to the transaction costs for high-value sales. This is a local tax distinct from federal or state taxes, and it's vital to factor into your budget. Next, you'll need to know about FIRPTA, or the Foreign Investment in Real Property Tax Act. This law impacts foreign persons when selling U.S. real property interests. When a foreign person sells U.S. real estate, 15% of the gross sales price is typically withheld at the time of sale for tax purposes. This isn't necessarily the final tax owed, but rather a withholding to ensure tax compliance. There are certain exemptions or reduced withholding certificates you can apply for, but it's a significant amount that is withheld unless those exemptions apply. Finally, let's talk about estate tax planning. This is crucial, especially if you're acquiring high-value assets. U.S. estate tax can apply to U.S. situated property owned by non-resident aliens. With proper planning, a significant portion of your U.S. assets could be subject to estate tax upon your passing. For this reason, if you're considering buying a high-value asset, it's absolutely imperative to consult with an attorney specializing in international estate planning. They can advise you on ownership structures and strategies to mitigate potential estate tax liabilities. As you can see, the legal and tax landscape for international buyers has many components. Because of this complexity, let's talk about some pro tips to help you navigate these waters successfully. I have 4 tips for you, and then we're going to talk about the biggest mistake you could make. Tip 1, hire a tax advisor early. This is perhaps the most crucial piece of advice. Cross-border tax issues can get incredibly complex, involving both US and your home country's tax laws. A qualified international tax advisor can help you understand your obligations, structure your purchase tax efficiently, and plan for potential rental income, as well as prepare for a future sale. Getting professional advice up front can save you significant headaches and costs down the line. Tip 2, always get title insurance. This protects you against financial loss from defects in title to real property. Issues like undisclosed liens, fraudulent deeds, or errors in public records can arise, and title insurance provides vital protection against these unforeseen legal or financial disputes. It's a standard part of U.S. real estate transactions and is an essential safeguard for your investment. Tip 3, if you're buying property for personal use, whether it's a vacation home or potential future residence, make sure to inquire about visa options that might align with your intentions. While owning property doesn't automatically grant you a visa, certain visas, like the E2 investor visa from treaty countries, or even considering long-term visitor visas, might be relevant to your situation and allow for extended stays. Always consult with an immigration attorney to understand your specific options. Tip 4, it's important to work with a real estate agent experienced with international clients. Not all real estate agents have this experience, and it's invaluable for guiding you through the process, from identifying suitable properties to connecting you with the right network of professionals and anticipating potential issues before they arise. Of course, I'd be remiss if I didn't mention that my team and I help people like you every day. If the West Coast is among the places you're considering, we'd love to make it smooth and easy for you. Reach out anytime. So what's the biggest mistake you can make when looking at properties in the US? Whenever I get an inquiry, one of my first questions is, what are your plans for the property? A frequent response, I'm looking to buy a vacation home and then rent it out when I'm not using it, meaning put it on VRBO or Airbnb. But here's the catch. Not every city allows short-term rentals. They are sometimes outright banned, or there are restrictions that would severely limit revenue potential. For example, Los Angeles has several restrictions, but I'll get straight to the deal killer. Properties must be the host's primary residence, not a second home or investment property. With that single restriction, we don't even need to go into the rest of the restrictions. That said, some nearby communities like Malibu have fewer restrictions. What's more, rules can change. Just this week, Lake Tahoe, which is north of LA by 6 hours driving, made recent news by having their outright ban in certain areas of South Lake Tahoe blocked by the courts. The city ban was blocked by the courts. Now, that seems like good news, and it seems to have opened up more short-term rental opportunities in this busy resort town. But this rule change may not be as favorable as first glance. A rule was allowed to stand that was a requirement of short-term rentals that they must be spaced at least 150 feet apart. The idea was to limit the impact of short-term rentals on established neighborhoods, so folks now interested in South Lake Tahoe are dealing with much more limited supply, giving that ongoing spacing requirement. As you can see, local insight from realtors and a healthy dose of legal due diligence from an attorney can go a real long way to make sure you're not getting a less than desirable situation. You have a lot of choices of property types and financing options, and there are many legal and tax implications, of course, but there's another important thing that can make or break your experience buying in Los Angeles. So check out this deep dive where I'll show you what it is and how you can make living in LA the best experience ever. If you're making the move to LA, it's good to work with insiders, and my team and I would love to help. Just call, email, or text to get started. I'm Tony Mariotti. See you in the next video.